Hey, welcome to another video. Today we're going to talk a little bit more about something that we covered previously, which was types of investments. Now we're going to build on some of the things we covered there and talk about diversification of investments and risk tolerance. These are just tools and things to know to help you build your portfolio. And if you don't know what a portfolio is all of the investments that you have, right? Like all of your stocks, all of your bonds, all of the stuff that we talked about in the previous video and some more things. So let's go to a quick recap, just talking about what investments are. And investments are just ways to grow your money over time, right? There are things you buy in order to sell, or there are things you buy in order to get more money, right? And an investment is putting money into something with the hope of making more money, and the return is what you get from that, right? This is all pretty basic stuff. If you want more in-depth stuff, I would recommend checking out the previous video about investments because that definitely helps a lot for this, right? This is made to build off of that. So I'll give you a second. You can pause, go back, watch that, and then come here. It's not that long a video, but all right. So let's move on to the actual new stuff. Let's talk about diversification because that could be a new term, right? So diversification in terms of investment is spreading your investments across different areas, right? It does a few things, right? It helps reduce risk, it helps maximize reward, and it also helps you have more experience, if that makes sense. Especially as teens, it's good to build experience with investments in a bunch of areas. Uh, So in diversification investments can be across, like for example, it could be across stocks, bonds, mutual funds, and ETFs, right? Again, what we talked about in the last video, or it can be across companies and stocks, for example, right? And I'll actually use an example like that. Let's say we have three investors, okay, and two companies, investor one, two, and three, and company A and B, right? Investor one invests $100 into company A. Investor 2 invests $100 in a company B. Just to be clear, they're investing in their stock. And investor 3 invests $50 into each. Now, in the case that company A goes bankrupt, investor 1 has no money, right? Because they invested all of their $100 into that. But if company B goes bankrupt, investor 1's fine. They still have their $100 and probably more. In the case of investor 2, they might look a little bit better at the start because you might see the 0 and 100 and be like, oh, investor 2 is doing way better. But then you keep going and it's like, and then you realize that investor 2 made the same mistake that investor 1 did, right? Like, I'm sure you've heard the old adage of not putting your eggs all in one basket, and this is exactly what I'm talking about. Because here we see that on average, in the situations, every investor actually makes $50. But I don't know about you, I'd much rather be in investor three's position, who, as you can see, put $50 in each, so they always have $50, right? And that's the thing about this. What we're seeing is that diversification and risk, they have an inverse relation. The more diversified your assets are, the less risk you have. But there's another thing than just how much risk you have. It's how much risk you can tolerate, right? So risk is obviously the chance you could lose money in investments. That can be in many ways, like the company going bankrupt, just the stock price falling, or a multitude of other things. But what's more important is risk tolerance. Okay, and risk tolerance is an incredibly personal thing. It's not the same for everyone, and I can't tell you what yours should be. Risk tolerance is how much risk you as an investor can deal with, right? So this could be based on your age, this could be based on your financial situation, this could be based on just how you feel after seeing red versus green, right? So that means that everyone's is different, and because of that, risk tolerance is the key thing that helps build your portfolio. So people with a higher risk tolerance might go for more risky investments. Like you can see on the bottom here, they might go for stocks, right? People lower risk tolerance might take bonds, mutual funds, treasuries. Quick note, it looks like mutual funds are risky on this. I just want to say that there's a huge gap between stocks and mutual funds. Mutual funds are actually a very safe investment. And the thing is, the person with the lowest risk tolerance should ideally spread themselves out the most, right? So, for example, someone who's willing to take on risk, right? Maybe they go like 50% stocks, 30% mutual funds, 20% bonds, right? Someone with a low risk tolerance might do something almost the exact opposite. They might be like 40% mutual funds, 40% bonds, 20% stocks, right? So they lower the amount that they invest in the riskier investments so that they have more guaranteed returns but less returns, obviously. So that's all that I had to cover, but just to recap the main points, investments are how you are going to build wealth. And the most important thing when choosing your investments is to think about diversifying your investments and understanding your risk tolerance, right? So use your risk tolerance to build a diverse portfolio, which will then give you financial security, right? And it may not seem like this applies right now, but I really want to hammer this home because as teens, we are in a unique position where we can actually begin to act on these things in a safer environment, right? Even if it's just like $10, right? You can do this with, as the topic of this video, less risk because you don't have the responsibilities that you will later in life with money, right? So I'd say building these good habits and diverse portfolios and understanding your risk tolerance now is a huge advantage. That's all this time. Make sure to like, subscribe, and leave a comment, and check out the next video when it comes out. Anyway, see you next time.